process. So bravo to you. Um, my name is Terri Ho. I am a certified financial planner and a certified divorce financial analyst with Mansky Wealth Management here in Houston, Texas. We are ranked top 5 private wealth firm in Houston, and I found out this week that we were recognized as America's top financial advisory firm for 2026 by Newsweek. So that's a huge deal for us. Um, I specialize in helping clients through life's biggest financial transitions, such as navigating a divorce. But more importantly, I have walked this journey myself with my own divorce. So before my own divorce, people would often ask me, Terri, why divorce? The truth is, I didn't choose divorce. Divorce chose me. When I was younger, I watched my mom go through a very painful divorce. She was strong, but without guidance or any kind of financial support. It was it was confusing and oftentimes lonely. So I remember wanting to help her but not knowing how. And that's the same experience that never left me and has become my purpose to help others navigate the same transitions with clarity, strategy, and just confidence versus having fear. So every time I sit across from a client who's overwhelmed by change, I think of my mom. And it reminds me that this work matters. So today, I'm able to help individuals navigate divorce terrains with just confidence and clarity. So over the years, I have been featured in national publications such as like Go Baking Rate, Super Money, and others, and I've had the honor of speaking at events that just empower business owners and women in transition. But through the things that I've accomplished professionally, I'll tell you this one thing. Every step of this journey has reinforced one belief for me. When people understand their finances, they can reclaim their peace of mind. And ironically, being in this profession made me stronger during my own divorce. That's because I knew where all my finances were, and that knowledge alone gave me a sense of control many people don't have. For so many, money becomes one of the biggest hurdles, whether that's dependency, maybe lack of access, or simply just not knowing where to start. That uncertainty alone can keep people stuck far longer than they need to be. And I think from my experience, most divorces take about 6 months, often longer, just depending on the assets and the complexity. And it becomes even more costly and drawn out when you don't know where your accounts are, or even what assets you do have. So luckily, my situation didn't involve children, but I was able to finalize in just 2 months. But I think what the important part of this is that I knew what I was entitled to, and I had the voice to ask for it rather than just settling for what he decided was mine. That power alone gave me the strength to just go through my divorce. So I'm here today, just not as a financial professional, but as someone still healing, someone who understands the emotional weight that comes with financial uncertainty. So my goal here is to just help you find peace in your numbers, the same way that Stacy helps you find peace in your heart. So before we go any deeper, I want to pause and just acknowledge something real. When life changes, your finances changes too. Even though that sounds obvious, it's one of the hardest parts to face because suddenly every number has emotion attachment to it. What used to be a simple bank statement now feels like a reminder that it feels that everything is shifting. And divorce touches every part of your financial life, the home, the accounts, the future you picture. And if you weren't the one handling the finances before, it can feel like you're walking into the dark. But here's the beautiful part. The moment you understand where you truly stand, that fear starts to shift. Same thing with that I tell every client. Once we kind of draw everything out, you start seeing the light and you feel better. So when you finally get to see everything clearly on paper, you can breathe again. And that's when that clarity becomes peace. And that's the conversation, and that's why this conversation matters. Every woman going through divorce deserves confidence, not confusion, deserves peace, not panic, deserves clarity, not chaos. And my hope today is to help you feel informed, grounded, and just ready for whatever comes next, whatever journey you are in, if it's in the beginning, going through the chaos, or just afterwards. So, first thing to understand is what your state actually considers yours. California is a community property state, meaning most things earned or acquired during marriage are divided 50-50. And if you guys notice, I said most things. There are exceptions. So inheritance or gifts, for example, are considered separate property unless they've been commingled. Here's what I mean in plain English. Let's say your husband or spouse was gifted a rental property. Technically, that is his separate property. If, but if the income from the property ever went into a joint account, that money might be considered community property. And that's where good documentation and a good attorney can make all the difference. And even though community property is split 50-50, it doesn't always mean it's fair. One person may keep a home with taxes, insurance, repairs, and while the other walks away with a retirement account that just quietly grows in the background. And I've seen this so many times where the wife wants to keep the house because there's emotional tied to it, and rightfully so. Your kids grew up there. You know the neighbors. It feels like stability in the middle of chaos. But from a financial standpoint, it's not always the smartest move. Sometimes, and this varies per situation, sometimes the house can be a memory with the mortgage. It costs money to maintain, while something like a retirement account can build your future. So it just all varies on the whole picture and it depends on each circumstances. I'll also share another case study with you guys. I worked with a client who was dividing an investment portfolio along with other assets. On paper, it looked perfectly even. The totals matched dollar for dollar, and when I dug a little deeper, I noticed something. Every stock she was receiving had a lower cost basis. That just means that the original price of the investment, so whatever original price that she purchased at, I noticed it was the lowest one. And when you sell those shares, you owe taxes on it, on the gain. So imagine a stock bought at $100. Okay. You sold it for $200. So you would pay capital gains tax on that $100 profit. But if she hadn't known to look for that, her so-called half would have come with a tax bill that quietly ate away into her share. So whenever I caught that, I flagged it to her attorney so the attorney could renegotiate for her, and we ended up saving her another $70,000. So we were able to bring that to the table and say, hey, this is not a 50-50 split. If you look at it and we look at this, we're going to have to sell out of these stocks. This is what her tax bill looks. So we were able to renegotiate and made it more even playing field for her. So sometimes, even though it shows dollar for dollar and it matches, it may not be the whole story.
My gosh, Terry, I'm like, like those stocks I got, I'm like, that was never looked at. Oh my gosh, this is
And it
mind.
happens more often than you think because, how would you even know that that even matters? What kind of taxation with that? And a lot of times, depending on the spouse, sometimes they take care of their own investments or maybe someone else does. But if we are splitting that in half, we have in our company, our firm specifically, we like to diversify. So we may have to buy in and out, and that cost basis is key.
Well, yeah, okay.
So one of the things I always tell clients, like before deciding what to keep, ask yourself, would this make me money or cost me more money in the future? And like I said, just having someone kind of weigh out the pros and cons is always just best. So that way you can make a more logical decision versus more emotional, because divorce is very emotional. And this is the step that I call financial detangling, similar to what your communities call. It's a process of just sorting, labeling, and just making sure you understand what belongs where, because clarity can prevent that confusion later. So next, once you understand what counts as marital property, the next step is just creating clarity. I know I use clarity a lot, but clarity is what's key when you're going through divorce because oftentimes emotion fogs that just the whole process. I always tell my clients, you can't heal what you can't see. So numbers are often the mirror that tells the truth. The very first thing I do with clients is I create a net worth snapshot. I put everything on one page with dates, That means your assets, your debts, your income and expenses. Once it's all listed out, then you start seeing, okay, the big picture. Then that fear starts to fade because you can finally see the full picture. And if you can, if you are in the beginning phases of your divorce, I always advise clients to, sorry, I have a little tickle and I can feel myself starting to come out. But I always advise clients start gathering these statements early. Bank accounts, retirement plans, investments, credit cards, even loan balances. And oftentimes it comes through the mail. So if you just go through the mail and just start looking, you start seeing these statements. Hold on to them. And having those ready saves your attorney a lot of time, which means you save money. Another thing you can do before meeting with your attorney is outline what your current monthly household expenses are. That's the number that helps them advocate for temporary support or spousal maintenance that truly reflects your lifestyle while the divorce is pending. And this is the part where I see clients kind of just rush through it, or maybe their attorney, the attorney's there to advocate your needs and wants. And when it comes to money, they only have a high level sense of what's going on. So they'll give you that. They may walk you through that, but that's the number they'll use. So I always tell client, this is where the step where like you need to take the time and just write out everything, even if it doesn't even make sense. On a piece of paper, write out household, mortgage, electricity, utilities, water, groceries. Just write it all out. And then we can sort through the numbers for you. You don't need to make it fancy or anything like that. But this is a step where emotional and financial healing really intersect. And when you see the numbers clear, you start to feel control again. And I think that's the biggest key. Don't be afraid. Sometimes the other thing I always tell clients is print out the last 3 months of your bank statements. Wherever you use to pay for expenses, things, household things, print them out. Get a highlighter, start highlighting out, okay, this is what it looks like I pay for this, this, and this, and just pull out a calculator and start adding them up. That really helps you know where all your finances are. So once you gather that clarity, the next step is making sure nothing important is overlooked, especially hidden or forgotten assets. Um, I know we have fewer people, but just by seeing an emoji raise of hands, has anyone found assets or accounts that they didn't even know existed during their process? Yeah, that's when it comes out. It happens more often than you guys think. So when you hear the phrase hidden assets, most people picture something sneaky, maybe money stashed in a secret account or someone's trying to hide wealth, which does happen. But more often, it's not about secrecy. It's just about overlooking it. There are things that may get mixed simply because you don't know where to look or what questions to ask. That's very common. This is where your tax return becomes your best detective tool. If anybody, the biggest advice I could give you is if you can get a hold of your tax return, that right there will help your attorney to kind of see through what's going on. And sometimes they may involve a CPA or a role that like myself, like CDFA. But this is where your tax return becomes your best, like I said, detective. Oh, my little light went off. It's fine. But so it's the best detector and it's easy accessible by two ways. You can email your CPA. That's exactly what I did when I knew that we're about to go through this divorce. I emailed my CPA. I was like, "Hey, I need a copy of our tax return." That's the first thing I went to. Even though I knew where our finances are, I just wanted to double check. And then asking for or going to irs.gov. When you go there, you can get your tax records and transcript. You'll have to create an account online, but it can review things like interest income, dividends, business ownerships, or even side income that might not have been discussed openly. And when I tell you guys like hey, this is about hidden assets or secrecy, it's not necessary that it's the goal is to catch anyone. It's just to create more clarity for you because that's when that gives you confidence and then you will have confidence to be able to negotiate. Now, so now that we talked about what to look for, let's walk through a few real examples of what this looks like in practice. So before we get to the actual tax returns, one of the simplest documents that tells a story is a W-2 form. So W-2 income is the easiest way to spot because when your spouse works for a company, everything is recorded. Their paycheck, benefits, bonuses, and even retirement contribution. It's all documented right here from their, right there, like from their oh, sorry, I keep going that way. From their 401k. So, like I said, so it's all documented right there from their 401k contributions. Maybe there's an HSA to the cost of employer provided health insurance. So even though it looks like there's just another form, it actually gives you a snapshot of their total compensation, not just what their salary, but and that's the important because benefits and contributions are part of the financial picture that you're entitled to understand. So when you look at those little letter codes in box 12, let's go here 12A, 12B, 12C. They're not random, they're clues to the benefits, accounts, and potential assets. For example, if you look at code D, 12A-D, that shows a 401k contribution. That means there's a retirement plan in play. It doesn't matter if you know the amount or not, but at least you know, okay, that's what I need to look for. There's a retirement account. I need to know where the statements are. And then any employer match are part of what needs to be considered during property division. And then when you look at, jump down to W, that represents a HSA contribution. That's a health saving plan. So normally when it's health saving plan, that's something that some employers provide where you can stash money away. You can use it tax-free for qualified medical expenses. That's also something that you can also negotiate. And oftentimes with an HSA, that can go from one employer to another. So, and a lot of people overlook that account. Um, the next thing is the code DD. That lists the cost of employer provided health insurance. This one doesn't affect your taxable income, but it tells you the company does offer health coverage and what it costs. So why does health insurance matter? Because it's a negotiation opportunity. If your spouse carries the family's insurance through work, you can request they continue to cover your premiums for a period of time post-divorce. A lot of time that's overlooked, but you have to do that because that gets pricey when you do it on your own. It's always better if it's through an employer. And that right there is leverage, and that's often overlooked. So the point is your W-2 isn't just a form you file and forget, it is a financial snapshot. So when you know how to read it, you uncover benefits and entitlements that you can directly impact your settlement. So let's talk about one of the most overlooked sources of income in divorce, the self-employed spouse. So W-2, you can get a glimpse of that, but when it comes to self-employed, there's a lot of moving parts. If your spouse owns a business, a Schedule C is your gold mine. It's where all the business income and the expenses live. It often tells a very different story than what is said out loud. So if you look at line 1, that shows gross receipts. That's total revenue before any expenses. That's how much he's bringing in before you deduct the expenses out. If that number looks high, but the bottom number here at 31 looks small, it could mean expenses are being used aggressively to reduce taxable income. Line 7 gives you gross income, essentially the true top line after returns and allowances. And the big one, line 31, that's net profit or loss. This number determines how much self-employment tax your spouse pays. So if you see that number there, that means it also shows how much they contribute to a retirement account. Oftentimes for self self-employed, they have contributions where you may not be able to see, but with the Schedule C, you'll be able to see if they have any kind of retirement account, maybe a SEP IRA, maybe a solo 401k. So then you know to go back to your attorney and say, hey, I see accounts here. This doesn't make sense. This should be the part of the negotiation. And then ultimately what shows up as income for support calculation. So if this number seems unusually low, or if there's a big jump in business deductions right before the divorce, that's a red flag worth asking about. Because they probably are trying to funnel money out of it. So that way when it comes to negotiation, they can say, well, I only make this much. So that's something to also keep in mind. But like I said, the point isn't about just like trying to accuse anyone of wrongdoing. It's just to understand the full picture for yourself. So you know what you're entitled to. Because hidden income isn't always like offshore accounts. Sometimes it's just sitting on line 31 on a tax return. Tax returns, like I said, I mentioned earlier, it's like your treasure map. Schedule B, if you see on there, if you want to take a screenshot, Schedule B, that's interest and dividends. That means that they have investment accounts. So if you see a Schedule B, that means they have some investment accounts, and you can look up and try to see if you can get some statements. Um, if you see D, that's capital assets. And then, of course, E is rental properties. So most of the time you'll know if there's rental properties, but that's where you can also look too. And that often reviews income or any accounts that never came up in the conversation. But they're all right there in black and white. So if I were, the one thing is, if you can get a hands on your tax return, that will really help give whoever's helping you an idea of where everything is. So once you start seeing these details, the things you might miss before, the next question becomes, how do I plan ahead so the process doesn't control me? That's where we talk about planning for attorney fees. When it comes to a divorce, one of the first hurdles most people face is, how am I going to pay for this? I remember asking myself the same question. Do I dip into my savings? Do I open a credit card? And that answer really depends on your situation. But what matters most is just having a plan. I always encourage clients to set aside what I call a divorce cash reserve. And a lot of times that's for people who you see it coming, you don't know when it's coming or not, but you see it and then you're able to do so. There's stories where people I've seen women go out and they start preparing for it. They'll start when they go grocery shopping, they'll start buying more gift cards, just general gift cards to put money on that, to save it for a rainy day. They may even rent a storage unit and start stashing things away just to prepare for it. And like I said, that varies. That may be a situation where there may be family violence, things like that, but there are ways that you can do that. So, like I said, set aside a divorce cash reserve. This covers legal, financial, and emotional costs. Because when you're prepared for the expenses, like I said, you may feel more in control. So next thing is, bef but before you can do so, you have to interview attorneys because you don't know what the cost may be. So when I was interviewing attorneys, I treated it like it was hiring professional service. I asked for their fee schedule up front, what they charge hourly, what's the estimated total cost might be for my case, even if it's a range. This is something you can do ahead of time because you have client attorney privilege. So you can kind of find out how much, like explain to them your situation, and they give you an idea of what that cost looks like, and then you can start preparing for that. I also ask questions like, what do you charge for text messages or quick questions? These are things that are overlooked. And then is it a lower rate if I'm communicating with your paralegal instead of you? My attorney charged $19.50 per text message. Okay. That's even more than an international plan. So, as soon as I've asked that question, I knew that I saved everything and I made sure I sent paragraphs to her. So that way and then I kept a list of questions on my phone to ask them all at once instead of reaching out one by one. That alone saved me hundreds of dollars. And I also will say this a lot of times, so my role, let's go back to that before go back into this. My role, it's not very common. It's been around since 1985 or so, and a lot of people don't know that my role actually exists. It's a CDFA. That's where I'm able to work on the financial side of a divorce before you get to the attorney. I get the clients either before, during, or after, but the ideal situation is to be able to get them before because I can save you a lot of costs, the same thing your attorney's going to ask you for, because a lot of times the biggest piece of divorce is the financial aspect side. Um, but right there alone, save you hundreds. I've also actually created a list of questions you should ask any attorney you're considering. So feel free to get my information, email me afterwards, and I'll send you a copy. Here's also a helpful tip. So the good thing about interviewing attorneys is that once you meet with them, your spouse generally can't hire them later. It's called a conflict rule. So the initial consultation establishes confidentiality, which prevents the other party from using the same attorney or firm against you. So even if you're just exploring options, those meetings can help protect your choices. But keep in mind, the good attorneys will have an upfront consultation fee. So that's what I've seen a lot of. What I personally did for financial preparation for myself when the divorce was happening, where before we filed, was I opened a joint credit card while we were still married, using our income, our combined income to qualify, which made it marital debt because the divorce is not finalized. You're still married. So I would open that first, and then I had the statement sent to my best friend's house for privacy because you don't want that to come to your house. Then there's questions. It's just a nightmare. If you can, I will always advise send it to your best friend's house, or at least make it where it's paperless. The other thing I've also advised is maybe opening, if you guys have joint accounts, go to a different bank altogether and open up an account. So that way, if you do have income coming in, like let's say you got, most of the times, the way that I want a family set up is like you have a joint checking account, you have a joint savings, but then you have your own separate checking and separate savings account. So if your paycheck's going to your checking, that way you can funnel some of that money somewhere else if you're trying to save for that. Um, the crazy thing that stuck with me is my mentor once told me something that I'll never forget. Women plan their weddings, men plan their divorces. And that may not always be the case, but if divorce has been hinted at, it's wise to start preparing. It's not about expecting the worst. It's not about it's about protecting yourself. And don't forget, some attorneys offer payment plans or stage retainers. So always ask during your consultation. Don't be fearful to ask for that. So again, because you're just not paying for your legal bills, you're investing your peace of mind. So always ask for those things that I mentioned earlier. So I mentioned earlier, when you're preparing for a divorce, your attorney will ask for your monthly expenses. That's not just busy work, it's the foundation for your negotiating power. Having a clear post-divorce expense sheet allows you to walk into negotiation knowing exactly what you need to live and what you're willing to settle for. This helped me tremendously during my own divorce. Just because, yes, I already knew where our finances sit, but then I was able to say, okay, this is what mortgage is going to look like. This is what my utilities, my shopping, groceries, my gas. I put everything down so I knew this is my line. And then I knew what amount that I could actually walk away with. It really took away the fear of the unknown. And I wasn't guessing. I knew the lowest number I can comfortably accept and still rebuild my life. And that's the kind of clarity that gave me peace. And honestly, during one of the most difficult transitions of my life, I wasn't anxious or nervous because I knew my numbers. But that same list becomes a starting point of your post-divorce financial plan. So if you can, start building a post-divorce expense sheet now. List your needs, your wants, savings. For example, needs are your must-have. That's your rent, car payment, groceries, insurance, gas, utilities. Your wants are the things that make life feel like you again. So that's your nails, your hair, gym, dinner with friends. Saving, that is your future security. It's not optional. This is a must. So if you're unsure how to break it down, a simple rule of thumb is 50-30-20 rule. So 50% of your income goes to your needs, 30% goes to your wants, 20% goes to savings or debt payoff. So I think I have it in the corner where if you look for an example, let's say your total income is 4,000. 50% of that's 2,000. So you need to make sure that about a $2,000 range, it goes to the needs. And then the next one is your saving. That's 20%. 20% of 4,000 is 800. Move aside. And then of course your wants. I leave that a little higher because that's things that you makes you feel normal again, but that gives you an example. Going back, I do want to touch on your saving bucket. So your saving bucket is your rainy day fund. That's the money you rely on when life happens. That could be maybe possibly maybe in a transition of a job, maybe a flat tire, maybe an unexpected medical cost. The goal is to always have at least 3 to 6 months of your savings expenses saved. So if your expenses are 2,000, 3 months of that, 6,000 saved. So it all just depends. But again, this starts with knowing what your monthly expenses are. A lot of times I have people ask me, hey, I'm starting over. I just don't know where to start. I'm going from dual income to a single income. What do I do? It's all you have to do is just know what that looks like going forward first. Once you have that number, we can plan around that. Um, so The goal is, like I said, the goal is to have at least 3 to 6 months of expenses saved. And once you reach that, that's when you can start focusing on building wealth, investing, planning, growing again. And here's the kicker. Most people try to save what's left after spending. That's not how it works. The truth is, you rarely have anything over. So I always advise and say, let's flip that mindset. First, take care of your needs, what that cost looks like. Then you pay your savings. Yes, you pay yourself first. So whatever's left is guilt-free money that you can enjoy spending. So I come across clients where, maybe budgeting is something that's new to them or something they didn't have to focus on, which is fine. So what I'll tell them to do is, hey, let's have a savings account and let's have a checking account. Whatever your income or your paycheck, let's funnel it into the savings account first. You're not going to funnel it into your checking account. You're going to funnel it into your savings account. Then when you know what your monthly expenses are, you'll subtract that out of your savings into your checking. That way, if you get any kind of bonuses, you get a pay raise, anything like that, you don't have that lifestyle creep and you start spending more because you know that means you're saving more already and you're just taking care of what needs. And when you're doing your expenses, the one thing I always tell people is be real with your number. Um, re overestimate. That's exactly what I did. I added more wiggle room. So on top of all the stuff that I have to pay for, I also add in things. Let's say I gave myself a budget of what I needed for going out to dinner with girlfriends. Um, Extra expenditures on top of getting your nails done, your hair done, because that's something that's realistic. You have your nails, you have that stuff, but then maybe you want to spend a little bit here at Target. Maybe you have Amazon. Maybe you have this. Give your Factor that budget into as well, because that's realistic. Um, so I always added wiggle room for things like self-care, nails, all that stuff. They were just a part of what made me feel normal again. So it's okay if you don't know what those numbers are. Let's say you weren't the one taking care of the expenses for the home. You can Google that. Google's your best friend. You can say, what is the average cost for electricity for a one bedroom? You'll have an actual number and you'll know. So you can kind of put that into the cost. You can look up average utilities, insurance costs, rent for your area. Those are all things that you can start. It's work, but it's good for you because that will help you get through your divorce. And you're just not making a budget. You're designing a plan for stability and confidence. So give yourself grace. It may take a few months to feel balanced, but every line you write down in your budget is a step towards freedom. Okay. So when my divorce was finalized, I remember sitting there thinking, I made it. Now what? That's when it hit me. This isn't the end. It's a rebirth. Every decisions I made after that point, every bill I pay, every saving goals I set, every no I said became an act of self-trust. And so empowerment isn't about feeling fearless. It's about finally feeling safe in your own decisions again. So you're not starting over, you're starting wiser, is what I always tell my clients. And the beauty of this season is that you get to write a new story, one that feels like peace, purpose, and possibility. But that's all I have on my end. Thank you for so much allowing this space with you guys today. I know you guys, I gave you guys very high level of things, but I'm open to answering any kind of questions, things like that you have. This is my information. So if we aren't able to talk now, you can definitely email me. I think that I'm also in the community. So Stacy and I have talked about if you have questions, I'd be happy to answer for